So Terry, you're the only real estate analyst in the country who talks about sales volumes when you're thinking about what's going to happen with real estate moving forward. So you've got a proprietary formula called the Price Predictor Index. What is it?
Yeah, look, think we have a cutting edge over all other analysts in the country because we do this. We analyse sales volume, sales activity. We get the data every quarter and we look at what's happening, the patterns that are happening with every significant town and suburb in the country. Because what's happening with sales volumes is a forward indicator of what will happen with prices. I've seen this throughout my whole career, which extends across 4 decades, that sales activity patterns change first and prices react later. So if you know what's happening with sales activity, whether they're rising or falling in a location, it gives you an indication whether prices are going to rise or fall in a location. So that's what we do with the Price Predictor Index. Every quarter we analyse sales activity trends for every town and suburb in the country, and we package that up, analyse it. We give every suburb and town a ranking, whether it's a consistent market, a recovering market, a rising market, or a declining market. And that gives people some clue what might happen with prices, and they can use that information to perhaps buy in an area before prices start to rise, or to avoid making the mistake of getting into an area that's actually classified by us in the Price Predictor Index as a declining market.
So as an investor, I can use this as a bit of a future indicator of what to expect. And that's obvious for investors. I can buy into a location before the growth happens, or I can avoid a place before it falls. But I imagine this would be just as powerful for a homeowner.
Well, absolutely right. Homeowners are perhaps less driven by the desire for capital growth, but people who buy a home do want it to grow in value because it gives them financial comfort, it gives them equity. If at some point in the future values do fall, that previous growth means they still have equity, and they can use that equity to perhaps create an investment property portfolio. So that's an incredibly important thing also for home buyers, but investors perhaps more so.
Just on a personal front, I used the Price Predictor Index a couple of years ago. I had a property in Springfield Lakes in Queensland, which I bought for $450,000. I used the Price Predictor Index to identify that as a location with rising sales activity. Very quickly, within 12 months, I had about $200,000 worth of uplift. But where it was important is on the other end of the scale, when the sales volume started to come down, that's where I actually took out an equity release because I realized that it had hit the top of the market for that period. Yeah. So I took out equity because if it did fall, I'd lose that equity. So it's a powerful tool for use in a lot of different ways.
Yeah, and it gives us market intelligence that people don't get elsewhere. Most people just tap into media, and what media focuses on what's happening with median prices, but it lags market activity. So as an example, when interest rates started to rise around May 2022, it tended to coincide with the fall off in prices in, say, Sydney, Melbourne and Brisbane. So media attributed the fall off in prices to the fact interest rates were rising, but those markets had actually been falling some time before that. Our Price Predictor Index showed us that those markets were starting to fall in the latter part of 2021, and particularly in the March quarter of 2022. It's a huge fall off in sales activity in all those major cities. So we could see the fall off in prices coming before anybody else could. And equally, towards the end of 2023, what we see is that the Perth boom that the media is still chattering about very excitedly as the boom market in Australia, we can see that that's actually coming to an end because there's been a big drop off in sales activity, but it hasn't shown up in prices yet.
So you've just finished the analysis of the September quarter of the Price Predictor Index. What's in store?
Yeah, look, the first thing that shows that the recovery that we saw in the June quarter in the biggest cities, Sydney, Melbourne, Brisbane in particular, has gone to a whole other level of positivity in the September quarter. So Melbourne at the start of 2023 was really a struggling market with no price growth. But 6 months later, it's firstly a recovering market, and now you could almost say it's a booming market. There's very, very strong sales activity in Melbourne. The turnaround has been quite extraordinary. And so we've seen that pattern also in Brisbane and Sydney. We've seen the markets that hadn't fallen away in the previous 12 months, like Perth and Adelaide, still quite solid, although Perth is starting to come off the boil. Adelaide continues to be really consistent. Many of the regional markets are also showing good uplift. Regional Queensland has followed the pattern of Brisbane. Regional Victoria has followed the pattern in Victoria, although not quite as strong. The only exceptions to this general theme of recovery and uplift are Darwin and Canberra, and it's significant to us that those are the capital cities are the two weakest economies in the country. The ACT and the Northern Territory are very weak economies, whereas Victoria is the number one ranked economy in the State of States reports by CommSec, and that is reflected in the rise of the Melbourne property market this year.